Hi, it's Adam Watson here from the Chatham office of the JMRD Watson Wealth Management team. It's the morning of November 3rd, 2022, and I'm back after a couple weeks of not filming videos. The roller coaster ride that is the 2022 markets has continued over the last while. September was once again an unfriendly month as most markets were down around 9%. Once again, Canada was the exception or bright spot, being down only 4%. The September results led to a lot of statement shock. However, markets are still very hard to predict and proving once again that timing the markets is nearly impossible. The month of October basically completely reversed course. Markets were up big, ranging from 4% for the Nasdaq to 14% for the Dow Jones Industrial Average. Specifically for the Dow, this was the largest increase in a single month in nearly 50 years, which is quite remarkable. Our teams mentioned many times in our communications that some of the biggest up days in the markets occur very closely to large down days, and apparently that applies to months as well. Towards the end of October, the focus went back on interest rates and inflation. The Bank of Canada was the first on deck, and they surprised by only raising rates 0.5%. The tone of the speech that they release with the announcement was a little more muted than the aggressive nature of prior meetings, which was also a bit of a surprise. Contrast that with the U.S., who the Federal Reserve met yesterday afternoon, and they increased their interest rates by 0.75% for the fourth consecutive meeting, and they kept their very hawkish or aggressive tone in their speech. Specifically notable was that more increases to the interest rates are needed in the U.S. to slow inflation, and slowing inflation is an even bigger goal for them than preventing a recession. That the Canadian announcement had led many to consider that rates would slow or maybe stop going up entirely around the world, and the U.S. has changed the tone. The Bank of England this morning raised 0.75%, which was their highest increase in 33 years. So where does that leave us? As we've seen for a lot of this year and last few months, technology names, which are the largest names in the U.S., have continued to struggle as interest rates rise and growth in those names slow. Oil and gas names, which have been a favorite of Warren Buffett and out of vogue for most people for a few years, have continued to do very well. We've added oil and gas names over the past few years to many of the baskets, and this has helped investment results over the last year or two. On the fixed income side, very challenging year still, one of the worst ever for bonds. But as rates rise, the potential return goes up. So we're seeing lots of 5% bonds and GICs and even higher for the first time in over 15 years, which is a great thing, even if it's still below the current inflation levels. Most of that market news is a lot of noise. It won't be remembered long term. However, it's much easier for pundits and prognosticators to focus on short-term negative, even if that means they miss out on some long-term positives. And this can have critical compounding effects. Most of our clients, their time horizons aren't days, weeks, months, or even years. It's decades, and in many cases, multiple decades. And missing out on compounding and big up days can cost lots of long-term dollars for families. With that in mind, it's critical to make sure that you're comfortable with your portfolio and your asset allocation as we're having these ups and downs. Please reach out to any member of the team to discuss your current mix, your current volatility, how is it working to help you reach your goals. That's the name of the game for what we're trying to help you achieve. Into the more lighter hearted section. I forgot the book that I was reading this month, so I'll save that summary for our next chat. Instead, I'll mention a show I've been watching. I'm not a soccer fan. I know very little about soccer, and it's not something I would turn on a normal basis. However, I've been watching Welcome to Wrexham, and I find it very fascinating. The show is a documentary on Ryan Reynolds and Rob McElhenney purchasing the Wrexham Football Club. The show starts out right with the challenges to purchasing the club. Originally, tells the history of the club, the town, explains how English and European soccer works, and you get a behind the scenes look at the day to day of running the club. Um, and more importantly, and the main part of the story is the club's fighting for promotion into a higher league in England, similar to the Formula One documentary Drive to Survive. The show's given me a much greater appreciation for a sport I've largely ignored in the past. So I highly recommend it if you're into a documentary type show. One last note. Congratulations to Reg Jackson of our London office on being recognized by the Globe and Mail and Shook Research. He was named one of the top 10 advisors in Canada, and congrats. I'm very fortunate to be able to consider you a mentor and a friend, and this honor is truly deserved, Reg. Don't forget to follow the team on LinkedIn, Twitter, Facebook, any of the social medias, and watch your inbox on Fridays for our weekly market observer for the team's most up-to-date thoughts. Have a great weekend.